Good afternoon and welcome to the daily roundup here with ForexAnalytix. And we do a quick recap of the majors as well as some of the popular cross rates here. Cover the news and then get ready ahead of any economic releases that we have ahead of Asia. We are expecting coming into Asia at 6:45 Eastern. I'm in Central Time, so this is set for 5:45 me, but if you're looking at Eastern time, most everyone's more comfortable using Eastern time if they're either here in the States or in Europe or abroad. We do have New Zealand building consents at 6:45 Eastern. This is minor here with the foreign bond investments here with Japan. And then, of course, we have Australian building approvals, private house approvals, capital expenditures. Those are going to come out at 9:30 Eastern, and we'll see how things stand currently right now. And then at 10 p.m. Eastern, we do have New Zealand debt forecast. But we'll get to those shortly, which can do a quick recap of where things have developed. We have seen the dollar index make that move above 98. But if you're with us and you remember with ForexAnalytix, we do have our European crossover webinar that's daily that takes place at 4 a.m. Eastern, 3 a.m. my local time. And we go over the different levels, what we're looking at for the day ahead. And then that show is actually recorded, and Stelios makes it available for those who just about an hour and a half before the New York session. So have an opportunity to watch that on demand there in the chat room. You click on that link if you're not up at that time during the European crossover, which is 4 a.m. Eastern. Referencing the bias chart here for today, we're seeing here that what we have here as a key is 98.15 is what we're looking for. We got the asterisk because that's a key level on the daily. And we'll go on and move into the cash dollar index. And right there coming across here, right there. You see that 98.15? If we can get a close above that, that would open the door for another leg higher. But we have to get that close. Now, that being said, the dollar index is doing very well, still holding up against, has recaptured the 97.89. I do have some concerns that I've mentioned before is that we saw our manufacturing out of the States that came out this last Thursday was the worst in a decade. And what has happened now is that's opened the door for potentially for a Fed rate cut in the fall. And I think that will impact, to be quite honest with you, I'm surprised when you look at the idea that, the run to safety for the dollar index, when you look at what all has transpired here with the S&Ps and, that for the last couple of weeks, we were looking for a breakdown. I made a case. We actually had a break at that time when I think it was about a week and a half ago. I was saying, hey, look, there's no reason. We were expecting this, and I think we made a big deal about it that day. We were looking for a break in the S&Ps. We were playing the market that way as far as in the currencies. And we're saying, hey, there's no reason to be long the S&Ps. This thing with China is not going anywhere. Things are looking pretty bad. It is, we're looking for a big break. And we got a break that day. Now we came back, but ultimately, we had talked way back when, which was supported with 2,800, and then eventually a break. And since then, we did go on to get that break. So you're thinking is, after you get a break like this, I'm thinking, boy, if they're running for cover to the dollar, this dollar is probably going to take off like gangbusters. You see what I'm saying? But it's not. As we're at the 98.15, certainly it's not bearish. But you have to wonder, is like I said, is that, and now if you look at Fed funds futures, they're actually pricing in 3 rate cuts through the end of next year. But they are pricing in now for looking for a rate cut potentially this fall, and that seems to make sense. And we've seen also the bit of a curve inversion between 3 months and the 10-year rate, and you've seen once again, like I said, rates continue to go and fall. So whereas the dollar's been, we've had a divergent central bank raising while others were cutting back. Well, now we're starting to have to price that in, and that's my thinking is that the dollar may have a tough row to hoe to continue to move higher. We're going to move back in to the main screen. So when we're looking at the cash dollar index, we're certainly back up here. But one of the things I think may be helping this is as we go in towards the end of the month. Hard to go in, they'll just go along with that trend, but I'm not expecting the dollar to come apart or anything like that. Although from the start of the week, if we do see a pullback, we're thinking that we're looking back for a move towards this 38%. Let's see what we do now. But once again, like I said, if the S&Ps are coming under sunder, you would think we would see a more dramatic run up in the dollar index. And obviously, I think part of that, you have a couple things working against that. Obviously, interest rates are continuing to move lower, but maybe you can say, well, interest rates with other central banks are also, when you look across the globe, you're seeing right now, we're seeing the bunds, new lows here in the bunds or recent lows. So you can make that case. But once again, one of the things has been is that the Fed was raising while everybody else was holding their own or cutting back a little bit. Now the potential is for the Fed to cut in the fall. And whether you believe that or not, it's hard to ignore when you get the manufacturing that came out and this last Thursday was the worst in almost a decade. So we're starting to, think of it this way. You're starting to garner a little bit of momentum. It's like a little bit of a snowball. And so garner a little bit. So whether or not we have a cut in the fall, we just may very well have one in the fall. I don't know. But my thought is that the market will ultimately have to price that in. But we are only a couple of days away from the end of the month. The trend is continuing to move higher. So maybe we stay with that. And then after that, we start to slide back. We have seen this repeatedly before with the dollar, 2 steps forward, 1 step back, 2 steps forward, 1 step back. So maybe we'll start to see a bit of a slide afterwards. Certainly today is the opportunity for the dollar index to blow out all kinds of shorts, and we're simply not seeing that. Doesn't mean it's going to go to hell in a handbasket immediately, but that's my take on that. Looking here at the euro is trying to make a stand here. We did have our support here on the bias chart, 1145. But when we were in the room, I did go in and point this out here that we had support, and that stopped here, right here at this 1125. At the time we were tagging that. We're holding that here. A pretty big deal if on the euro we get a daily close below 1130. We'll see whether or not that happens or not. But a daily close below 1130 would certainly be very, very bearish. But we had some support. So our intraday support was for 45. But I had this level coming in actually on the 2 hour. I have it listed here as a 5 minute, but on the 2 hour, this comes from back when. We'll take a look at it. You can see this 1125, and that seems to have held it so far to the pip. We'll see what happens. Cable continues to remain weak, but we're moving on to one of the more important stories of the day was on the dollar CAD. And one of the things with the dollar CAD, we had mentioned in our bias chart analysis at the beginning of the week is that the 35 level being elusive and saying it was just that, elusive, and that each time that this has popped up above the foxhole, 3504, it's been knocked back down. It's going to be key if we can get a close above 3504. I was able to get a scalp short earlier today when we made this run up here. Here's 35.37. If you're with us here in the European crossover webinar, you saw right there we have 35.37 for our resistance with an important daily close at 35.04. So once again, this advantage, like I said, if you're with a member with ForexAnalytix, you have the opportunity to not only take advantage of the chat room and excellent area here with all the members in here, but you also have the opportunity, as I mentioned, and Blake's here all the time. You have a great plethora of traders that are very supportive. Everybody shares their entries, shares what they're looking at, what they're not looking at, what works for them, what doesn't. But also you have the advantage of the patterns in play that the team goes and puts out. Now, like I said, I do the bias chart analysis. Mine is more structured or focused towards intraday trading. And I did go on and make a point about this too, is that these markets have been tough to trade. I'll tell you what, I'm a scalper per se. I've always said that I'm never going to be the guy that said, oh, I just closed out for 150 pips. Now, I'll tell you, Amanda is the gal that can, she holds her trades longer term. She sometimes holds them shorter, but that's my penchant. But I'll tell you what, these markets, they've been tough to trade because we just don't get that much volatility. Sometimes we come here and there. But for me, that's what's been the one thing that's been my saving grace is that primarily I'm just scalping. And I was talking to some of the team today, and I remember when we used to get those nice scalps in about 10 minutes. You grab yourself about, obviously it's different when you get a economic report or central bank thing. You grab 30 or 40 pips, might be a range real quick over 5 minutes, but we used to get these wider ranges. And so what I'm finding now is I have to scalp for smaller levels because it's just not my I won't say personality, but mentality to hold trades for a long time. Although I actually have a hold here that I got long yesterday at 11.65 with the euro, because I'm thinking from a longer term perspective, I think we'll kind of hold here. We'll see what happens. But if we get a daily close above 11.30, I would have to exit stage right at this point. We'll see what happens. The dollar index needs to close above that 98.15. Another market that I'm looking at also is that we were looking at before, we've mentioned, is the peso. And generally, you're going to see a big run up here in the peso when you see risk aversion. And if today's not a day for risk aversion, I don't know what is, but we're seeing this thing pair off. Now, if once again, if you're with us in the European crossover webinar, or if you're with the ForexAnalytix, we had our bias chart support this morning at 19.29.6, a bias chart resistance here for the peso. Overall, we said it's important if they were to close above 19.23.6. But here's today's bias chart resistance, 19.29.6. We did this at 4 a.m. in the morning, and you can see here the high today was 19.28.967. So like I said, most of when we're looking here, when we do the setup for the bias chart analysis, it's all focused on primarily day trading. A lot of the traders who may not day trade or hold for a little bit longer period will use this sometimes to incorporate with their own analysis to fine-tune an entry or fine-tune an exit. Like I said, primarily I'm a scalper. You can see here our support is 19.14.5, although we are sliding back in here. Let's go back in here. You see, there's our support here, 19.14.5. If you're playing for the short side and you're thinking, okay, well, probably not a bad idea to come off a little bit here. But my concern here with the peso is, once again, with the S&Ps, they are coming off the bottom a little bit, but you would have thought that we would probably, once again, scream up here into the 40s, although our bias chart resistance was 19.29.6. But that's what I'm saying, my concern. I think the dollar index may hold its own because we're at the end of the month, but I'm not sure that we're going to continue to be able to hang on to these gains if you're looking further out, okay? Dalian's another surprise that has held, and we'll take a look here, has held that pivot that we've been talking about, the 927 pivot, and it still does. We had our bias chart support. We talked about that. We'd even had put it down here since yesterday at 875, just so, and no one would be caught with their pants down if we took that dip. And you would have thought they would have cleaned out a few people, if nothing else, just to come and clean out some stops and then pop back up. But we're holding very well. So once again, kind of see some schisms in the market that in normal trade, I want to call it normal trading, but you generally don't see it, but kind of makes you scratch your head. And why sometimes with these markets you have to trade individually, and why I think you have to, I want to say, model yourself. It's everybody has their own different approach, but for me, I've moved into trading the cross rates. I've also focused more and more at times on scalping because I see that the opportunities present themselves on a daily basis. When I say a daily basis, is sometimes you don't have anything there, and then you start to see the setups in a particular market. You can make the play for that market for that day, but we just don't see that. My point is, you don't see this continued volatility at this point. I think we're at a precipice now with the S&Ps that maybe we'll start to see some extended volatility with FX. That being said, let's go on and quickly move into the cross rates, and then I just want to cover into Asia. So I spent a little bit of time just explaining things here. One of the things that we did going to come out is I didn't get a chance to look at, but it's going to be important, is the Kiwi is really taking a punch here. The Aussie, yes, but the Aussie was the one that was getting punched up, and the Kiwi was holding up better than the Aussie itself. So certainly we've seen some weakness here. We're also looking here with the Aussie yen here, which has actually held up very well. Once again, one of these to me is a little bit odd. You know, you would think here with the S&Ps coming apart, you'd see an extended move. We actually had, which has been our bias chart support, cents yesterday, 75.31, and we still haven't even gone down there to take it out. Now we're holding around this 50%, but once again, this is kind of like what I'm talking about. You get in these markets where all of a sudden they get somewhat quiet for different reasons, and you really have to look around for your better opportunities here, and you really have to be, I want to say active, but you just have to go in and keep your eyes open and have a set of markets that you look across that are different to find out what's moving over the course of the next day or a couple of days. And that's the way that I've been managed to go on and survive here, is by primarily scalping. But there's different approaches. Like I said, Amanda, who's excellent, will hold positions for a long period of time and with great success. Let's go and get back into the main screen, though. Today's a day. I just want to go on and recap, general recap of what we do here and on the Roundup. And as I mentioned, coming into Asia trading, one of the things that we do is we do a recap of what's happened so far in the New York session as we come out of the European session, and what developments we've seen here. One of the ones we were talking about here was with the peso as well as the cash dollar index. But as we come into the Asian session, which is really one of the primary purposes of the show, at 6:45, we do have the building consensus here, which last time was down 6.9%, and that's here for the Kiwi and New Zealand data. And we're still continuing to see further weakness. And I think we're seeing the Kiwi play catch up to what the Aussie dollar is doing. You can see here the Kiwi getting, semi-whacked here. And it's important here. We'll take a look at, we'll get to that in just a moment. But we do have Australian data, as I said, at 9:30 Eastern. We have building approvals, private house approvals. Now look at the building approvals. Now it's pretty much baked in the cake that the RBA, I don't want to say totally baked in the cake, but it certainly looks like they'll be cutting this month, coming into this month, which is June. So we're looking for a cut there. And I know that Westpac is looking for 3 cuts overall, in the future. So things have continued to worsen a bit here. Also, they focused about their concern is with the employment rate, and certainly that doesn't look like that's going to turn around. I mean, it doesn't look like they said for them to gather enough inflation, they would have to see that improve, and that's not the idea or the outlook, which would suggest that we're going to see rate cuts coming down the road. Private house approvals, once again, prior down minus 3.2%. Capital expenditures here, once again, that'll be out at 9:30 Eastern. And then at 10 p.m. Eastern, we do have net debt forecast coming out of New Zealand. That being said, we're going to move this out of the way. Let's go and take a look at the Kiwi. One of the things that was holding this market and was able to go and get above that, and you can see we broke above this trend line, was the 65.17. But you can see we've already moved back to the 65.17. We're just below it, and really the door's open for us to challenge the 64.93. It doesn't sound very far away, but the point is if we get a close below that, it's really going to open the door for an extended leg down. And the thought process being, and one of the things that helped push things down even lower yesterday, Trump was hinting about, hey, it doesn't look like things are going to get resolved with China. We've been saying that for a long time. If you follow us on the European crossover webinar, we've been saying this for nearly 2 months, kept saying it's the boy who cried wolf, the boy who cried wolf. Trump saying that things are going great, things are this. It was never going to come around. It just wasn't. And China's in it for the long haul, and they're just not going to play around, and they're just going to go in and wait it out. And there's no need for them to go in and cave in. So really, we're just going to have to see how much further this pushes it. And one of the reasons why we had made a case about a couple of weeks ago that the S&Ps, there's just no reason, we were saying there's no reason to hold them. It's, this market, why are you going to be the one holding the bag, in hopes of hope above hope? And henceforth, we've seen that pull down. And whether this matriculates into further worsening situation in New Zealand and obviously Australia, which is considered like a proxy for China, we shall see. But we're going to have that data out today. And it's going to be very important with the Kiwi if we get a foothold, a close below the 64.93 and maintain it. Obviously, we've had a little bit lower than that, but daily close below that is going to be bad news, to say the least. That's all we've got here. You can see here our bias chart support here on the Pesos holding this 1914. I guess every now and then you get kind of lucky there, so to speak. Obviously, the bias resistance here was 1929.6. I think we missed it by just a few pips. And here's the bias chart support, 1914.5. Once again, missed it by just a few pips here. Key is going to be the dollar index, as I said, 98.15 on the daily if we can close above that. And as I mentioned, go on and try out the European, go and try ForexAnalytix. Try it out to see what we got a great supporting chat room, as well as some of the other features that are included. Many to go over right now, including real-time data feed, but data feed announcement. But that being said, take a look, try it out for a trial basis, and you can always catch us here on the European crossover, 4 a.m. Eastern, as well as a daily roundup, just for a quick recap of things. And thanks for joining us here on the Roundup.